Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. Let's focus on a company now. India Pesticides reported a weak set of Q2 numbers on a YOY basis, but quarter-on-quarter there was some margin recovery that we saw. Revenues, they were impacted due to decline in exports. To discuss this and the demand trends going forward, Dheeraj Kumar Jain, CEO of India Pesticides, is joining us now. Mr. Jain, good afternoon. Thank you so much for joining us. Well, that's been the case for the industry, right? Q2 did see a YOY decline. There were inventory drawdowns as well. But come Q3, are we seeing some recovery, especially in the export markets? Because that's where you did see some decline. And are you expecting price hikes or volume growth coming in there?
Yeah, good afternoon to all. Thank you very much for giving this opportunity. And we are very quite hopeful to get some improvement in our export sales this quarter now. And 2 quarters it was slightly less. But now this quarter there will be some increase this quarter and the next quarter.
What could the export numbers look like? You're saying you're anticipating a pickup in exports.
Yeah, actually this half yearly it was only 36% of our total revenue, and we expect to go it up to 40-42%.
Okay, so that is the revenue share that you'll see. If you can just give us a sense of what the quarterly run rate would look like. It was around 62 crore rupees in Q2. When you say it will improve, to what levels will it improve? Because last year it was around 120 crore rupees.
Yeah, it will be around 100 crores, madam.
Okay. So which are the countries where you've seen an export decline in the quarter gone by? And was it an account of volumes or realization?
Yeah, it was on the both. Actually, what has happened, all multinational companies, they had overstockings. So they were clearing the overstock positions. That is why the volumes have declined. And moreover, from the China, there was an oversupply. Because of that, the prices have also declined. So on both the front, the prices and as well as the volume, they declined a lot.
Okay, all right. And is that coming back now when you're talking about improvement in exports? Is pricing and volumes coming back to maybe not last year's levels, but are they improving? Are you seeing that in Q3 and Q4?
Certainly improving. As you rightly said, not to the last year's level, but they are improving over the last quarter. And we feel there will be good demand in the coming quarter.
Okay. So this, inventory destocking by MNCs will come to an end once the inventory rationalizes. But what about this, threat from overstocking from China, oversupply from China?
To China also, because what has happened during COVID period, lot of factories, they were kept on producing, but they could not sell. That is why China is having huge stocks, though they are offering in the market at a relatively lower price. So that also should come to end maybe 1 or 2 quarters maximum.
Okay, all right. So there is a recovery which is expected in the second half for yourself and the industry as well. Now, domestic formulation margins, they are around 15 to 18% as per the last conversation that we have had. Are export margins higher? Will you be looking at higher exports? And what would the split between technicals and formulations be in the second half of FY25?
Normally our split between technicals as well as in formulations is 80-20, and this last quarter gone by, it was 75-25 because technical sales were slightly less, but in Indian season we could sell more, so the formulation quota was slightly more. And the coming season, in the next half also, we will keep the same ratio of around 20%.
Okay, all right. So that is about...
India is growing, madam, 9 to 10% every year. So obviously the formulation sales will also increase accordingly.
Okay. So, 19 technicals will be going off patent soon in the market. Can you give us a sense of if there is any opportunity that lies for you there? What is the market size of the products which are going off patent? And you do have a lot in your pipeline, around 20, 30, 40 million dollars in the pipeline itself. What is the launch pipeline looking like in the second half?
Madam, our pipeline is very robust. We are going to start one block this quarter, and another block at our Hamirpur facility. Another block will be operational by end of the next quarter. And as you rightly said, there are a lot of products which are going off patent, and we have selected few of them with good demand and niche areas. And 3 to 4 products will be coming up in the FY25 and another 4 products in FY26.
What is the market size when you've looked at the opportunities and products going off patent? What is your market opportunity there?
If you say for IPL, the market opportunity for these 8 products would be at least 300 to 400 crores.
Okay, 300 to 400 crores. Would it come at better margins? What would your margin profile look like by FY25? Because earlier you did in 20s.
Yeah, madam, obtaining the year 20 margins is slightly difficult, but because the margins are slightly rationalized, but we are aiming at about 20 to 22% EBITDA margins in the medium term.
Okay. All right. Thank you, Mr. Jain, for joining us and explaining to us what's happening on ground and what the outlook is going forward. That's the word coming in from India Pesticides. Things are improving. Second half would be better than the first half. Export demand is coming back, and they do have a lot of products which are going off patent, and that is something where they have some opportunity as well.